Good afternoon, everyone. This is Henry with simplertrading.com, and I'm kicking off tonight's free video with a recap of a trade that I'd been giving you here in these free videos in some of the months past in ITB. So if you can understand the setup, you can apply that into two charts that I'm going to show you afterwards. And this is just the idea that the squeeze is showing us moments in time when a stock's price is compressed or trading sideways. There's a few ways of defining it, but basically it is building energy for its next directional move. So as these red dots continue to form, the consolidation continues, and then when they transition, that's where the directional move occurs. This is such a great chart for showing it. One, because we have done this one, back when it was forming and still coiled, and it's resolved exactly as it was supposed to, as these moving averages were respected. And again, making that new lifetime high today, these are the trends that we work to be a part of. Then, taking that as the lesson and then moving over into two others that I think are starting to do the same thing. Now, these are longer term picks, and they're signals that may take some time, either coming back in and testing these lows. Maybe I just say it as, in the next 3 months, I want to be able to look back at this and think Goldman Sachs was cheap below 400. So, you get down to 380, I've got that moving average there at about 373. Usually I'm going to be what I am trying to think here is that is cheap, because we're getting prepared for that squeeze to fire long and move in the direction of the overall prevailing trend. So that's one that I want to have you keep an eye on, and then we can also add DE to the list. So we've got that same way of thinking where we've had a phase of compression. You see it in the squeeze, and the squeeze helps you to define it, but you can see it just by saying, here is the trending move, takes you right up into that big round number of 400, and then it's in a range. So in a range, in compression, it's kind of just saying the same thing. And it's the thought of that it has a big trending move, and then price becomes agreed upon, right? It's kind of like, you trade here, you trade there. You're basically trading through about 370. So you kind of would say that maybe that's an agreed upon price. It won't be there for in the next 6 months, right? In the next 6 months, it's either going to go here or it's going to go here. You can't consolidate forever. Eventually this does have its release, and I'm going to try to, judge the direction of that release in the direction of the trend that led me there. And that's one thing that I wanted to have you on top of for the next couple of months. So I hope that helps and gives you some swing-based setups that you can apply as we get into the new year. Have a great rest of your afternoon, and we'll see you at the next free video. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.